Some updates this morning. Shortly after the President Work Group released their report on strengthening the U.S. leadership in digital financial technology, the SEC announced Project Crypto, which is aimed at updating the financial market infrastructure to enable digital assets. So there are five major kind of initiatives that are part of this announcement. It's just absolutely massive and also very disruptive, but in a positive way, I think. So you tell me in the comments if you think I'm missing the point here. I'm going to go through the announcement, but as you're going to see, this is just getting started. There's so many changes that are going to happen that it could make or break your financial future. So this is very important that you stay informed. Make sure you smash the like button and subscribe to my channel so that you stay up to date on all these changes that are happening. Let's get started. So this is the speech that Paul Atkins did, the American Leadership in the Digital Financial Revolution. He goes kind of through history of what's happening and why we don't do paper transactions anymore and all that kind of stuff. So the President Working Group on Digital Asset released their report a couple of weeks ago. And so he said he's launching Project Crypto to swiftly develop proposals to implement the President Work Group's recommendation. So if you haven't read that document, I think it's pretty interesting and important to read that. Look at all the things that they are planning to do to enable digital asset into everything that we do. First part is onshoring crypto. So Project Crypto will involve a broad range of initiatives across the Commission. First, we will work to bring crypto asset distributions back to America. The days of convoluted offshore corporate structures, decentralized theater, and confusion over security status are over. So what is he talking about here? When he's talking about asset distribution back to America, he's referring to crypto exchanges and token issuers that were setting up or have set up holding companies in the Caymans, in the Seychelles, in the BVI to avoid US oversight. Think of FTX, for example. When he's talking about the decentralization theater, project basically pretend to be decentralized. So the DAO, so often what they would do, these projects would basically say, hey, we're decentralized, but 60% or more of the actual supply was held by insiders. But they were calling it decentralized so that they wouldn't fall under the US jurisdiction. And obviously we've all heard about the confusion over security status. Is it a security? Is it a commodity? Because if it's a security, then it's part of the SEC. And if it's a commodity, it's regulated by the CFTC, which are very different. So you basically want to clarify all this, and that makes sense. I had a couple of projects on the crypto. I had an NFT. I had a couple of other projects. I'm telling you, it's very confusing. And basically what you're forced to do then is to go offshore, pretend you're not American, or you had to assume the worst case scenario and assume that you had a security so that you didn't get in trouble later on. Say, you're selling a security and now you're screwed here because you assumed that you were a commodity token. In line with the PWG's report, a key priority of mine will be to establish a regulatory framework for distributions of crypto assets in America. Despite what the SEC has said in the past, most crypto assets are not securities. But confusion over the application of the OE test, so this is how they determine if it's an SEC or not, a security or not, has led some innovators to treat all crypto assets as such, and that's exactly true. If they want to stay in the US, they have to assume that, otherwise they're going to be severely penalized. I have directed the Commission staff to work to develop clear guidelines that market participants can use to determine whether crypto asset is a security or subject to an investment contract. So our goal is to, when they talk about this investment contract, is that if people are buying it, they're buying the token, but primarily with the goal of making money, a profit, either on the ICO side of things, or there's some kind of incentive where they expect to have a profit. So this is called an investment contract, and then so then it would be part of the SEC at that point. But they're going to clarify that and What does that mean? So our goal is to help market participants to slot crypto assets into categories such as, is it the digital collectibles, is it the digital commodities, is it the stable coins, and assess the economic realities of a transaction. So that's going to be pretty interesting when you're thinking about NFTs. A lot of them were kind of meant to be collectibles, but there was also a potential for making a profit on these things. So some people would buy the NFT and then sell it for a profit. So how would that happen? How would that happen if it was a piece of art that you bought in an art gallery? So that's something to think about. But they're going to clarify all that. In addition, it should not be a scarlet letter to be deemed a security. So a scarlet letter is, if you have read that book, is basically something that says, kind of like you're flagged as, oh my God, this is a horrible, this is the worst thing that can happen to me, is to be called a security. That means I have to deal with so much more work. So I'm going to change my project so that I'm not a security. So that's exactly what they don't want this to be a burden basically on the innovators, on the entrepreneurs. So we need a regulatory framework for crypto asset securities that allows these products to flourish within American markets. So many insurers will prefer the flexibility in product design that the securities laws afford, and investors will benefit from the opportunity to earn distributions, have voting rights, and other features that are typical to securities. So they would want these features, but with the burdens of being a security, sometimes it's too much. So they want to avoid that. They want to make it, this is just a normal process, this is just a normal thing, and it's easy to work with the SEC. So projects should not be forced to establish decentralized autonomous organization, right? Because that's what they were doing. They were basically turning it into a DAO and then saying that they're not in the US theater, and then they could do whatever they want, even though most of the holders were actually potentially American citizen, or they were controlling 60% of the DAO anyway. Or they would go and do an offshore foundations or decentralize too early. So that's just kind of interesting. So lots of big projects. If you think of Solana, Ethereum, Algorand, they set up foundations like in Switzerland, Singapore, the Caymans, to basically distance themselves from the U.S. jurisdiction. So they didn't have to deal with it because it was such a burden. Atkins wants to change all that and make it so much easier to work here. For those crypto assets, transactions are subject to securities laws. I have asked the staff to propose purpose-fit disclosures, exemptions, safe harbors, including the so-called initial coin offerings, airdrops, and network rewards. So regarding these sorts of transactions, our goal should be that issuers no longer exclude Americans from their distribution to avoid legal complexities and lawsuits. Sometimes they would just say, I don't want to deal with any American law, so if you're in America, we don't want to deal with you. So additionally, many firms seek to tokenize their common stocks, bonds, partnership interests, and other securities, or tokenize the securities of third parties. So this innovation is offshore today due to these regulatory challenges in the United States. So you want to avoid that. I think it's very beneficial. I'm really looking forward to that. I think that's going to bring the innovation back here. Second, to achieve the President's goals, it is incumbent on the SEC to ensure that market participants have maximum choice when deciding where to custody and trade crypto assets. Right? So as I've said before, the right to have self-custody of one's private property is core American value. So it's okay to have self-custody, but you should also be able to give custody of your tokens to somebody else. I want to have a broker-dealer. I want them to handle my tokens. These would be my tokens. The same way we have like money, we create a special account at our broker, and then we pass our money there. We want to do maybe the same thing for some of my tokens and have the broker custody of those tokens. So some investors will continue to rely on SEC registrants such as broker dealers and investment advisors to hold assets on their behalf. It will be a priority of my chairmanship to carry out the PWG report's recommendation to modernize the SEC's custody requirements for registered intermediary. The thing about the custody requirements, it's very confusing. There's all kinds of different licenses. Bank, you can handle these kinds of assets. If you're a broker, you can handle these kinds of assets. So it's just very, very different. And then you have, if you look at 401ks or IRAs and stuff, you can also have different custodians if you want to do real estate investing or token or gold or art. You would have to go and move that money into a different custodians. So it's just kind of like very, very confusing. Every one of them has a different qualification, and it's not that great. You can imagine it's very confusing. They have all kinds of requirements and etc. It would be a priority for my chairmanship to carry out the recommendation, modernize the custody requirements for registered intermediaries. So all these intermediaries, right? So these are the firms that are normally would be registered by the SEC. So that would be the broker dealers, the investment advisors, and all that. But really clarify the custody requirements for these. It'd be nice to work in one place and then have all your different assets located in one place instead of having an account here, an account here, an account there. So that's kind of, I'm thinking, what I'm reading here is that they want to have some recommendations on how we can make that a possibility. Market participants should be permitted to engage in multiple business lines under the most efficient licensing structure possible. Yeah, because right now you have a broker that does this kind of thing, but he's not allowed to do this. This bank is allowed to do this and not that, and it's just a mishmash of everything. So they want to have like a licensing structure that would allow someone to do multiple business line, not have all these different licensing and then all of that. I'm in favor of affording them the freedom to choose the most efficient regulatory framework for their business, provided that the framework adequately protects investors. So sounds like a good plan. And the other thing, when we think about the digital asset, so right now most crypto custody is done by very specialized firms. You think about Coinbase, you think it was a BitGo. So they're not the same legal categories as banks and brokers or custodians of securities. What happens with them? Like, are they going to be able to, if I want to transfer my stocks, my regular stocks to Coinbase, can I do that? Should I do that? Does Coinbase want to be allowed to do that? So what would happen with that? And similarly with the big Wall Street players, you look at JP Morgan, you look at Fidelity, Schwab, right now they can't hold crypto. So maybe they want to hold crypto. They want to have obviously they want to have all your money. They want to have it in there. Right now the infrastructure doesn't even allow them to basically share a wallet or a custody of these tokens. And it's just basically clarifying all that. So that I think that's a great initiative if we could do it that way. So that could potentially like squeeze out some independent like crypto custodians or crypto some exchanges as well. Because I don't know what SEC is going to do. They may have some kind of criteria. Okay, well, you need to have a minimum amount of capital. You need to have regular audits. You need to have this and this and this. And then maybe some smaller crypto custodians may not be able to afford that, basically not be able to do business with Americans. Number 3 is the super app. Key priority of my chairmanship is to allow market participants to innovate with super apps. So what do you mean by super apps? Well, plain and simple, securities intermediaries should be able to offer a broad range of products and services under one roof with a single license. A broker-dealer with an alternative trading system should be able to offer trading in non-security crypto assets alongside crypto asset securities, traditional securities, and other services, like crypto asset staking and lending, without requiring 50 licenses and multiple federal licenses. So they want to create some kind of application where I want to do this. These are the services I want to do, and I want to do them, across the state, and you just do one app basically and say, okay, this is it. These are the things that you can do, all of that, and really simplify the registration requirement here. The SEC, in concert with other regulators, should strive to have the most efficient licensing structure for SEC registrants. They should not be unnecessarily subject to multiple regulators. Right now, it's absolute nightmares. You have the blue filings you have to do and all that. I don't know if they're going to get rid of that. And I'm hoping that some of that stuff is actually going to kind of bleed over to other things that we're doing, like the Reg A, the Reg D, the Reg CF, and all that kind of stuff. Get rid of that so that as an entrepreneur, when I do my Reg D, my real estate investment fund, maybe I want to be able to make it easier to include other investors, like regular investors. Right now I can only do accredited investors with Red Brick Equity, but now I would be able to do it with all investors, maybe, if they kind of regulate that a little bit better and make it easier for me to do that. Okay, so regulators should provide the minimum effective dose of regulations necessary to protect investors while allowing entrepreneurs and businesses to flourish. Right now, it's kind of silly. Like, I'm just taking as an example my real estate investment fund, Red Brick Equity, and so we're assuming that because you're making so much money and because you have $1 million in the bank, then you're a sophisticated investor. You know what you're doing, and then you can invest in the fund. But you can have someone that is very sophisticated, that has years of experience doing real estate investment on their own. They don't have that money, and for whatever reason, and then they can't invest because they don't have the funds, the money, the revenue and stuff. So it's kind of weird. Assuming that because people have money, it's because they're sophisticated. It's not a good qualification for that. We should not artificially constrain business models and impose duplicative regulatory costs on American businesses that favor the largest firms that are better able to bear the regulatory burdens. Yeah, so it's very difficult, exactly, because it allows the biggest company to basically, it's easy for them to go and do this kind of stuff. They have a team that's going to handle all of that, but it's for the entrepreneurs. They want to make it easy for the new entrepreneurs and the innovations to be able to register and get their projects off the ground. I have directed the Commission staff to develop a framework that will allow non-security crypto assets and crypto asset securities to be traded side by side by SEC regulated platforms. So that's one thing. He's also asked the staff to evaluate the use of Commission authority to permit non-security crypto assets that are subject to an investment contract to trade on trading venues that are not registered with the Commission. You would be able to trade the crypto assets in SEC regulated platform, but you would also figure out how the Commission can permit non-security crypto assets to basically trade on non-registered platforms that are not registered with the Commission. So that's really going to broaden and kind of like formalize everything that everybody is doing what they're supposed to do. I think that's a great initiative. I'm keen to pursue such a solution as it will not only enable state licensed crypto asset platforms that are not registered with the SEC to list certain crypto assets, but also clears the way for CFTC regulated platforms to offer these products with margin capabilities, even without Congress providing the CFTC with additional authority. So basically unlocking even greater liquidity of these markets. It's kind of a mouthful, but basically it's referring to the tension in the crypto regulations, right? Whether it's like you have the SEC, you have the CFTC, and you have these exchanges. So security exchanges are obviously regulated by the SEC. So I'm talking New York Stock Exchange, NASDAQ, heavily regulated, enormous compliance requirements, and all of that. Now the crypto exchanges, if you think of Coinbase, for example, operate under state money transfer laws. They're not SEC exchange laws, but they want to, and they don't want Coinbase to be forced, and other exchanges like that, become NASDAQ and be like put a huge burden on them for basically doing an exchange. So they don't want to have that same level of scrutiny and compliance. So I don't know what the other trading platform are going to do, but this is they want to find a middle ground, a middle path that allows Coinbase to be flourishing and handle the trades in the exchanges without putting undue burden on them. Okay, fourth, I have directed the Commission staff to update antiquated agency rules and regulations to unleash the potential of on-chain software systems in our securities market. On-chain software comes in many shapes and sizes. Some of these systems are truly decentralized. You literally have the code within the on-chain and not operated by any intermediary. Other on-chain software systems have an operator, so both types of on-chain software should have a place within our financial market. It is essential that any crypto asset regulatory market structure create a path for software developers to unleash an on-chain software system that do not require operation by any central intermediary. So this is going to be very interesting because normally when you go to New York Stock Exchange or Nasdaq, you're basically exchanging a piece of the company, a share of the company. You're just exchanging stock. There's nothing attached to it. Now, if you do the trades of cryptos that have like on-chain systems, you're trading more than just that share. You're moving along with it a piece of software. How would that work in terms of compliance and regulations around that on-chain software? Are they going to be testing it? Is there going to be some criteria for doing that and making sure that the code actually is doing what it's supposed to do? So that's going to be kind of interesting, and I don't think the SEC is ready for that kind of change. So there's probably going to be some third-party testing and QA that's going to be doing that for these companies. So it is essential that any crypto asset regulatory market structure create a path for software developers to unleash on-chain software systems that do not require operation by any central intermediary. Right? So how are we going to do that? We have to make sure that we put the market structure in place for that and a clear path to get it done. Decentralized finance software systems like automated market makers facilitate automated and non-intermediated financial market activity. Federal securities laws have always assumed the involvement of intermediaries that require regulations and stuff like that. And yeah, I mean, there was always a ton of intermediaries between when you buy. Let's say you were with Schwab, you have a share, you sell some stocks on Nasdaq, and then the buyer is on some other exchanges. So there's a bunch of intermediaries that make the changes happen between the two brokers. So that's going to be very interesting to see how they're gonna. I mean, we already know how this should work, but they want basically to make sure that the laws allow this to happen and facilitates that for these market activities. So we already assumed the involvement of intermediaries, but doesn't mean that you need to do that for the sake of forcing intermediation where the markets can function without them. So if you have a market with on-chain software that allows this market to happen without intermediate, then we don't want to force an intermediate to be part of that. So we need to figure out how that's going to work. Decentralized finance and other forms of on-chain software system will be part of our securities markets and not drowned out by duplicative and unnecessary regulation. Accommodating trading of tokenized securities on-chain may require us to explore amendments to NMS. So this is the National Market System. Definitely. Congress clearly intended that competitive forces rather than unnecessary regulation guide the development of the national market system. There's some risk associated with that. I mean, we don't know what's going to happen. We don't want the government to be completely out of the equation. This initiative is something that's very, very unique. I didn't think I would see that in my lifetime, honestly. And finally, so this is the fifth initiative here, innovation and entrepreneurship. I think this is something that's pretty interesting. I don't know how that's going to work out, but so this is about innovation and entrepreneurialism. I would have said entrepreneurship are the engines of the American economy. The Commission is actively considering industry requests that could jumpstart innovative activity. We're also contemplating an innovation exemption that would allow registrants and non-registrants to quickly go to market with new business models and services that do not neatly fit within our existing rules and regulations. So they're open to the idea that someone comes up with an innovation that is they haven't thought about, and then to put an exemption and let it bring it to market and to see how it goes. I think that's going to be very interesting. So under my vision for an innovation exemption, innovators and visionaries will be able to immediately enter the market with new technologies and business models, but will not be required to comply with incompatible or burdensome prescriptive regulatory requirements that hinder productive economic activity. So say you want to do something new, and then these rules are kind of like make it very difficult to do this. Forget about them. we're just gonna forget. You just keep going, and we're gonna give you an exemption, and you can get that done. These initiatives are absolutely unbelievable. They're moving very fast. This is my thing here, is that they're moving very, very fast. What kind of loopholes, what kind of issues will happen to the market as they implement that? That's going to be something we're going to see. I think for the regular investors, it's gonna mean like easier access, potentially lower risk, a little bit of volatility, I think, or issues at the beginning. But at least clearer guidance on this is a securities, because you buy tokens, you don't know what it is sometimes, and what laws and rules apply to that. If there's any kind of like compliance, or is it like a free for all, Wild West kind of token? So it's going to be some clearer guidance on that. Also, self-custody, they preserve that right of self-custody, so your own wallet, etc., but also allow you to pass on to have a regulated custodians for your tokens as well. This is something that's very important if you're going to have to do broker dealers with your tokens. Consolidation of service also would mean kind of less confusion. There's one of their initiative is to you don't have to deal with I have to deal with Coinbase here, I have to deal with Schwab here or JP Morgan here, and they want to basically allow it to be consolidated, where I can go to JP Morgan and have all my Coinbase things all integrated without boundaries. For crypto investors, it's going to be definitely better clarity, reduced risk. You really know what you're about, especially the legal risk. You never knew if the token was a legal token. Was it security or commodities, and whether it was based in the Caribbean or not. And so it was just very very confusing. You didn't know what you were, if you were dealing with the future FTX or some other scammers, and so it's going to be definitely clear. It's going to reduce risk for crypto investors, and I think a smoother bridge between kind of the crypto world and I wouldn't say the real world, but Wall Street, basically crypto and Wall Street, kind of like a easier bridge between in terms of the DeFi. I think it doesn't necessarily mean, it sounds like it doesn't mean that they're going to be centralized, but it's going to be more compliance definitely to be accepted here. And if you're an entrepreneur and you do these crypto projects, this is going to be great. I mean, you don't need to go to the Caribbean or whatever to do your projects. You can stay here in the U.S. You can have your whole team here in the U.S. Faster market entry as well. So if you do some innovation, just like this initiative here, if you have some things that's really outside the boundaries of what the SEC and CFTC have done, they can give you an exemption for you to try it out. I don't know what that's going to look like, but this is something that's going to happen. So definitely open to innovation while protecting the investor's interest. So this is something that's going to be. So this is a complete pivot, I think, in terms of what the SEC does, and I think it's going to be a balance between protecting the investors and also being innovative and allowing people, entrepreneurs and innovators to basically move forward. But again, this is only the beginning. I mean, there's so much more going on. All these initiatives are basically going to expand into all kinds of different parts of the regulations, the laws, and what we do every day. So these changes can affect your financial future. So you want to make sure that you stay informed. Make sure you smash the like button, subscribe to my channel, and see you next time.